Is this your opportunity to buy the dip on this blue chip tech stock? Hey guys, hope you're doing well out there. Today we are taking a look at Microsoft Corporation, ticker symbol MSFT. This one is down roughly 3.5% in the after hours as they reported their Q4 earnings. We'll take a look into their key results, dive into specific segments, take a look at the all-important cash flows, and take a look at their balance sheet to see how future acquisitions and investments will impact this one. And lastly, we'll end it off by taking a look at the technicals for Microsoft. Selling off a little bit, we'll see if this is a buy the dip opportunity and how this one has performed in the long term. As always, if you are new to the channel and find this type of content valuable, be sure to hit the like and subscribe button to see more. Microsoft over the past year has outperformed very well, up just 33% over the past 1 year and up nearly 50% year to date. This one is sitting at a $2.5 trillion market cap at this point. We do have a small yield and a forward price to earnings of 35. So certainly not cheap on a price to earnings basis, but we'll dive into why it deserves this premium. Taking a look at their key segments, revenue came in at $56.2 billion, up 8% year over year. Estimates were closer to $55.5 billion, so a nice beat on revenue there. Net income came in at $20.1 billion, up 20%. That's fantastic growth. When you grow your revenues up 8%, but net income up 20%, you know you did some cost cutting, and we'll take a look into that in the income statement. EPS came in at $2.69, up 21% year over year. EPS estimates were closer to $2.55, so both beat on the top line and bottom line. Taking a look at Microsoft's guidance, now this is something they release on their conference call, which goes live at 6 p.m. Eastern time. So Microsoft's Q1 guidance came in just shy of analyst estimates, which could be the main reason why the stock is selling off a little bit in the after hours. Q1 guidance came in the range of 53.8 to 54.8 billion. Analyst estimates were closer to 54.9 billion. And taking a look at future growth for Microsoft, you can see that in this year, EPS growth and sales growth were expected to be in the mid-single digits. However, in fiscal year 2024 and 2025, growth both on the bottom line and top line is expected to ramp up again in that mid-teen. And so if Microsoft can accelerate their growth, accelerate their EPS, that certainly deserves a premium to their current valuation. Jumping into the different segments, we can see cloud revenue grew at a nice clip of 21%, Office 365 grew at 15%, LinkedIn saw moderate growth at just 5%, Dynamics 365 grew at 26%, Azure, the all-important cloud segment, grew at 26%. You love to see extremely high growth on this Azure segment as it's extremely high margins. You do see Windows OEM and devices declined both. We'll take a look into their product revenues declining, and Xbox stayed relatively flat year over year, up just 5%. Moving on to their income statement, we can see product revenues were down slightly, down from 17.9 billion a year ago down to 16.8 billion. We saw both Xbox having flat growth and Windows OEM was down year over year, which led to this decline in product revenue. However, it is a much smaller revenue segment compared to services, which saw very nice growth, up from $33.9 billion a year ago to now $39.3 billion. Total revenues jumped roughly, we'll call that $4.3 billion, while their cost of revenue just moved up marginally. So you love to see this. Revenue growth was great. However, they were able to control costs both on the product side and the services side. We saw product revenue declining, but the cost of that product revenue was also declining, which was good to see. However, with that explosive growth on the services revenue segment, we only saw roughly a $1 billion increase in the cost of that revenue. And so that $4.3 billion increase in total revenue flowed down to their gross margin of roughly increasing $3.3 billion, which you love to see. R&D actually ticked down, believe it or not. This is insane to think that Microsoft is launching so many new products. You see Copilot, they're integrating AI and ChatGPT into search. However, R&D, they're able to control and tick down. That's very impressive. Sales and marketing also tick down, which is amazing to see. And you see G&A did go up, however, not significantly. And so the savings in their cost of revenue flowed straight down to their operating income, which was up a whopping nearly $4 billion. Wow. Net income, you see, came in at $20 billion for the quarter. EPS came in at $2.69. And you can see they bought back some shares. However, we'll take a look more into how much they bought back in their cash flows. Moving on to the statement of cash flows, we pull down that net income number of $20.1 billion and get to add back things such as depreciation, amortization, stock-based comp, and we see inventory stayed relatively flat, accounts receivable stayed in line. We can see they repaid some debt, $1 billion worth of debt they repaid over this last quarter, and they slowed their pace of stock repurchase in the most recent quarter compared to a year ago, where they had bought back $8.7 billion. However, this quarter they only bought back $5.7 billion. And considering the stock is up so heavily over the last 1 year, it's actually okay to see that Microsoft is slowing the pace of the stock repurchase. We like to see companies buy back more shares when they think their company is undervalued. Certainly Microsoft is nearing all-time highs. I think it recently did hit an all-time high. And so we don't want to see Microsoft spend too much of their cash flows buying back their share when it's at an all-time high. They paid out more dividends, which you can see they had a dividend increase over the last 1 year. All things considered, generating $28 billion worth of cash flow in 3 months is absolutely insane. $87.5 billion worth of cash flow over the last 12 months. Most companies will never see $87 billion, let alone $28 billion, even in their top line. And so generating $28 billion worth of free cash flow each quarter is absolutely amazing. Moving on to the balance sheet from Microsoft, you can see some short-term investments rolled over to cash and cash equivalents. Inventory stayed relatively in line. You can see this large increase in property and equipment. And if you take a look at their cash flows, you see in their investing activity, they added another $8.9 billion in property and equipment and nearly doubled their purchase of investments from a year ago. And so you see Microsoft is investing heavily in property and equipment, which shows up on their balance sheet. Total assets came in at $411 billion. Total liabilities are sitting at $200 billion, so a nice ratio of asset to liabilities, well over 2, which is what you like to see. Moving on to the technical analysis of Microsoft, we have a 5-year chart pulled up here, and you can see it makes these channels on the way up and it channels on the way down. However, every time it's come down, it's been a great buying opportunity. Currently trading in this range of roughly 300 as high up to $370, and so it's sitting at roughly 388 right now. The first level of support, I would say, is closer to this $325 range at the bottom end of this channel. Sub 300 is certainly a phenomenal buying opportunity. Now, Microsoft is one of those highly watched stocks in the market, and so I'm sure everyone has their eye on this $300 level resistance. And so if Microsoft comes down to there, certainly there would be a lot of buying pressure. South of 300 is ideally where I would like to pick up more shares of Microsoft. This one is one of those stocks that you just continuously buy and you hold, and then you buy some more and you hold some more. I'm tempted to call this one of those no-brainer buys, as over the last 5 years it's done phenomenal. Over the last 10 years, just up, 984%. Playing in so many verticals, you love to see such a relentless management team. They're still investing heavily in property, investing heavily in new business lines, obviously investing heavily in the AI run, and even their acquisition of Activision. Once that's slated to go through should help out their Xbox business segment. And so Microsoft, just a leader in so many verticals, it's hard to see this one lose its power anytime soon, which makes it a great buy and which gives it that premium valuation that it ultimately deserves. That was my take on Microsoft Corporation. Let me know what you guys think of Microsoft in the comments below. Do you think this is a buy the dip opportunity? Do you think Microsoft is going to continue this run up, coasting past all-time highs? Or do you think it will have a steeper pullback and possibly better buying opportunities? As always, thanks so much for listening, and I'll hope to see you guys in the next video.